Hello, this is John Piper with the weekend pre-trading video clip, and it's Saturday the 31st of January, and we're looking at a chart, an hourly chart of FTSE. Right, the position here is that we've seen a fairly impulsive decline which has traced out 5 waves. So that's 1, 2, 3, 4 and 5. A bit of confusion around here. We've then got what may be an irregular correction with the A wave there, B wave here, and C wave here. So I'm labelling this currently. This is the top of 4. We'll cover that in previous reports. That's a big 4 actually, so it should be anyway. It's a big 4. This is 1 here, and this is 2. And we're now coming down again. And that seems the most likely outcome. The Dow fell back quite sharply last night. We need to see FTSE take out 4,000 convincingly. We went short up here somewhere. We took profits around here. Not the hugely wonderful exit, but that's the nature of the markets. You have to draw a line between, or compromise between, trying to let your profits run and using stops which are useful. So we went short again around here somewhere, and we're still officially short, looking for the market to go down. Our stops are above the high here. So a fairly sort of nice, neat pattern at the moment. It's interesting on this chart to see how this red moving average here, which is the 200-hour moving average, it's pretty successful there. We've got this peak here, well, extremely accurately. I do find these moving averages quite useful. And of course we've also gone down below the 51 here, which is a further negative. I mean, again, you can see how the 51 covered, traced this decline quite well, and then when it got broken here, that's when we had the bigger corrective move. So my expectation is that we're going to keep on going down now in a third wave, and that these short positions will do well. The alternative view is that we are in fact in a bear squeeze, but I think already in fact the market's come down fairly sharply, and you'd expect perhaps that not to be the case if we were in the grips of a fairly vicious bear squeeze. Okay, we'll now move on to another chart. Okay, I'll just quickly reiterate, this is a daily chart, reiterate the 5 waves down. 1, 2, 3, sort of retracted 4th wave here, and now we're going to see that 5th wave down, I expect. Of course, nothing's ever guaranteed in the markets, as I'm sure you're all well aware. Okay, on to the Dow. Here too we have a fairly solid decline, not so easy to count. Not much sign of that 2 wave, wave 2 currently. I think the count is not absolutely clear on this market. In fact, that's probably the biggest worry here, that we might be seeing at the end of the first leg down, and that it's time for a more substantial rally. To just confuse the issue, I mean 8,000 is a key support level, and the Dow closed right on 8,000 last night. So it didn't hold below it, it didn't hold above it. But certainly the fall yesterday was 140 odd points. So there's a case that the FTSE is going to fall back some more on Monday coming. I'll just look at the longer term chart quickly on this. Okay, of course this is the first leg down, and then we've got this wave 2 here. Again, we've got this moving average being quite useful. And so this leg down here is the one where we could see a little 2-way, but it could be of some substance. I mean, the bounce back on FTSE was fairly sharp. I mean, we're officially short of FTSE. I'm expecting the same kind of action on the Dow. The only question is whether it might blip up first. Down again. So again, it's looking very bearish. I can't really, there's not a great deal else to be said at the moment. This all comes down to, I mean, if 8,000 can hold, of course, that would be different. If we get a solid rally, and it goes above 8,250, holds above 8,250, that would change things quite dramatically. But at the moment, it's looking negative. Right, a quick look at the T-bond, just because there have been some developments here. My concern was whether this was a new impulsive action or whether it might be corrective. We can count this as a 1, 2, 3. Okay, we've got a few blips there, but that could be 4. Those blips are just lack of data on the chart. But now it's looking impulsive. We've got 1, 2, and this looks like a bit of a third coming in. So it's looking like the T1 has seen a key peak. I mean, it did rally extraordinarily in November and December, a big move, but that's now failing, and this looks like an impulsive move. And finally, we'll have a look at gold. Okay, gold is defying my expectations currently. We've got this 1, 2, 3, 4 with this fifth wave coming in, which seems to keep going higher than I'm expecting it to. So that's a 1, 2, maybe a 1, 2, 3, 4 with a 5. So I'm still looking at some kind of peak here. I guess I mean one shouldn't place too much reliance on one market to guide other markets. It's often a mistake. But if gold is peaking, it could suggest that equities could be bottoming, but there's no sign of that at the moment. In fact, there's no sign of gold peaking. It's still going higher, although we've got a slight wave pattern in place. We need that to be confirmed. So the trend is up. We have got 5 waves, potentially 5 waves, but without confirmation, that doesn't mean a great deal. So a fairly short report this weekend. I hope that was useful, and I'll be back next week with the normal daily reports. Thank you for listening.